It is sustainable. I mean, 8+ kind of numbers. There were certain one-offs that led to that acceleration, particularly the drop in global commodity price, which tends to be a positive for India. But I think the underlying growth drivers are falling in place. We do think the public capex push is going to continue. Inflation is coming down, which is actually going to be positive for rural consumption because real incomes start to increase. And private investment is still in the very early stages with the political and policy continuity. That should bode well for private investments. And finally, I think India is still in the very early stages of being integrated in global value chains, so that's going to be a big positive for exports as well.
Yeah, I want to talk about that because a lot of the strength, as we mentioned, coming from the manufacturing sector. Could you tell us some of the areas which really contributed to that growth?
So in this particular quarter, actually, the drivers of investments, it's primarily been on the investment side. And within investment, it's the government push on roads, power, some of the public capex that's driven the upside surprise. I think in addition, we are seeing real estate sector actually starting to do well. Within the manufacturing sector, therefore, it's largely the capex intensive sector, cement, steel, the cap goods, electrical equipment sector that's really contributing to this positive surprise.
Yeah. Sherry.
And so now, just to follow up on that infrastructure angle, infrastructure push is not really the first time in India, but what's different this time around is where the money is coming from potentially, because the last push from the previous government was really via state banks lending. Do you think that this government and then the new government is more interested in bringing in the fiscal power, and does it have fiscal power at this point?
Yeah, Sherry, I mean, we think it's going to be a two-stage process. Right now, it's stage one, where it's the central government itself plus centers transfers to state governments, so combined government actually pushing on public capex at this stage. But the second stage is really when this leads to a virtuous cycle and triggers a pickup in private investments, because what that will do is lead to more job creation and will be a further tailwind for government on the fiscal side. So as you said, I think there are fiscal constraints in terms of how far the government can take this. But once you get the virtuous revenue cycle, the baton actually will be passed on to the private sector, along with the general government maintaining the current levels of investment to GDP.
Yeah, and with this kind of growth number that you were talking about with Sam there, what is your expectations for the RBI? It certainly looks like the consensus is that the timing of the first rate cut has been pushed back to Q4. I mean, not a lot of appetite to step in front of the Federal Reserve in the U.S., right?
Well, India does have FX reserves, so it does have a tool if it needs to move ahead of the Fed. That said, growth has surprised on the upside consistently. We do think the RBI will maintain its FY25 GDP growth projection of 7%. Fortunately for India, it's been a Goldilocks. So high growth coming alongside core inflation, in fact, undershooting the headline inflation target of 4%, which means that on a one-year forward basis, the real policy rates in India are actually becoming more and more positive. So India is in a good place. The RBI has the ability to deliver some easing, not large, later on this year when there's greater confidence that inflation is settling around the 4% target.